Want to invest in multifamily properties but don't have the capital for a big down payment? The good news is, you don't need traditional bank loans to get started. In this video, I'm breaking down 5 creative financing strategies to help you acquire multifamily properties with little to no money down. Let's dive in. Traditional financing often requires 20 to 25% down, high credit scores, and strict income verification. But creative financing allows you to bypass these barriers, giving you more flexibility and increasing your deal flow. Whether you're new to investing or scaling up, these strategies can help you acquire properties faster. First up, seller financing, also known as owner carryback. This is when the seller acts as the bank, allowing you to make payments directly to them instead of going through a lender. How it works. The seller finances part or all of the purchase price, and you agree on interest rates, payment terms, and a balloon payment if needed. Why sellers agree? Motivated sellers, older landlords looking for passive income, or those with a fully paid-off property may prefer this option. Example, deal. A seller owns a $500,000 fourplex free and clear. Instead of a bank loan, you offer $50,000 down and finance the remaining $450,000 with 5% interest over 15 years. Seller financing is a win-win. You get the property without dealing with a bank, and the seller earns interest on their money while avoiding a big capital gains tax hit. Next, we have the subject to strategy. This means you take over the seller's existing mortgage payments while keeping the loan in their name. Why it works. Many sellers struggle with high payments, divorce, job loss, or just want out. Example, deal. A seller owes $200,000 on a property worth $250,000, but they need to sell quickly. Instead of getting a new loan, you take over their mortgage payments, keeping their loan in place. Key benefit: no need for a new loan or large down payment, just cover the closing costs and transfer ownership. This strategy works best when interest rates are rising, because you can lock in a lower rate from an existing loan rather than getting a new one. A lease option, also called rent-to-own, is another way to control a property without needing a huge down payment upfront. How it works. You agree to rent the property with the option to buy it later at a predetermined price. Why sellers agree. If they can't sell their property immediately, they can still collect rent while waiting for a full sale. Example, deal. You rent a triplex for $1, $500 month with a purchase option of $250,000 within 3 years. A portion of your rent, say $300/month, goes toward the purchase. This strategy allows you to control the property, generate rental income, and buy it later, often with no credit check or bank approval. If you don't have the funds, find someone who does. Private money lending involves borrowing from individuals instead of banks. Who lends money? Friends, family, business partners, or wealthy individuals looking for a return. Why it works. Private lenders get a better return than a bank savings account, and you get funding fast. Example, deal. A private investor loans you $100,000 at 8% interest for a duplex. You refinance later and pay them back with profits. This strategy works best when you build strong relationships and prove you can deliver solid investment returns. Lastly, let's talk about joint ventures and partnerships. If you don't have money, find someone who does and split the profits. How it works. One partner provides capital, while the other finds and manages the deal. Why it works. Investors with money often don't want to deal with tenants, renovations, or property management. Example, deal. You find a 6-unit building for $400,000. A partner funds the $100,000 down payment, while you manage the property. You split profits 50/50. With the right partnerships, you can scale your portfolio quickly while leveraging other people's resources. Creative financing makes multifamily investing possible, even if you don't have a huge bankroll. Whether it's seller financing, subject to, lease options, private lending, or joint ventures, there's always a way to structure a deal. Next steps. 1. Identify motivated sellers. Look for off-market deals, pre-foreclosures, and tired landlords. 2. Build a network. Connect with private lenders and potential partners. 3. Start small. Try one of these strategies on a duplex or triplex before scaling up. If you found this video helpful, hit that like button and subscribe for more real estate investing tips. Drop a comment below. What's your favorite creative financing strategy? Let's talk.